So you have bought an investment property years ago, but when is the best time to sell? Hi everyone, this is Casey here from Home Quarters in Singapore. And at Home Quarters, we specialize in customized marketing strategies that properly expose your unit for sale. If this is your first time here to this channel and you will like to know how we help sellers like you to sell their unit through our customized marketing strategies, guide buyers to purchase their dream home, and also advise investors to make the right investment decision here in Singapore, then start now by subscribing to this channel and tap that little bell icon so you'll get notified every time we here at Home Quarters do a new video. We love to see the happy faces of our client when they manage to achieve their objective, and we make it a seamless, fast, free experience. So make sure you visit our website, send us an email, or however you want to get a hold of us, because we are here to help. Today, we share with you what we feel are the 3 best timing to sell off an investment unit. They are stagnation of price of the unit, restructuring the owners for tax planning purposes, and also having found better investment opportunities than what you have currently. Firstly, we feel that as an investor, we have to let the money in the investment work hard for you. Generally, we have both rental yield and also capital appreciation potential in a real estate asset. Rental yield are easy to determine based on the current market rental that is being transacted. For example, in a condominium unit, we can take reference to the recent transacted rental price in the condominium to determine the next rental price if the current tenant is looking to renew or terminate. From there, we are able to calculate the gross rental yield and also the net rental yield after taking into account other costs relating to the investment unit, such as mortgage rates, condo maintenance fee, property tax, and agent servicing fee, to name a few. Capital appreciation potential is a little more complicated to determine because, like the name suggests, it is a potential and it could go higher in due time. But how long the potential can be realized is important here. Let me illustrate. If there are 2 properties that cost $1 million each and both have the potential to increase 50% to $1.5 million, investor will most likely be indifferent to choose one over another. However, if after 5 years, the property A appreciate by 25% and property B appreciate by 30%, on hindsight, property B is probably a better investment if the investor only want to hold on to the unit for 5 years. However, if the investor have another 5 years to go before needing the money from the investment for other needs, then what could be done? Assuming that both property A and B price is already stagnant. For one, the investor can keep the same property and hopefully at the end of another 5 years, it will realize its full potential and appreciate to $1.5 million. Or sell off the unit and put it into another one that has a better growth potential. As another bonus, with a larger capital after sale, there could be units with better opportunity available. Next, let us discuss the tax planning issue. If you have bought an investment unit with a partner or spouse and currently have capital to invest into another real estate, it might be helpful to look at how you plan the ownership of the current residential property portfolio. Take for example, a typical scenario. A couple bought a 2-bedroom condominium unit for investment for $700,000 and have since appreciated to $1 million as their second property purchase, with the first property purchase being the BTO or HDB that they currently own to stay, valued at around $500,000. If they were to put money into another 2-bedroom unit priced at $1 million, they will have to pay a 15% ABSD, additional buyer's stamp duty. If you are keen to learn more about ABSD, then check out our other video in the Real Talk series. Alternatively, they can sell off both the HDB and the 2-bedroom investment unit and start afresh with one of them owning a $1.5 million 3-bedroom unit and also the other spouse purchasing the 2-bedroom unit for investment. In between, they are able to take profit to add to their saving as well. In this case, as it is one property count per person, there is no need to pay the ABSD. The same scenario works if the couple aim to sell the 2-bedroom unit to purchase a landed property that often is priced above $2 million. And the ABSD, even at 12%, will be $240,000 at the minimum. That is almost half the price of their HDB flat. Of course, there are other considerations such as loan eligibility and whether they will want to live in a condominium in the first place. Lastly, with limited capital, when investors identify a better investment unit than the one they currently own, it might be worthwhile to take the profit that the current investment unit generated and put it into another one with better growth potential. We have seen cases where investors cut losses to do the same as well. The money returned together with the rental and saving accumulated over the years, they might be able to purchase a bigger investment unit or even multiple investment units diversified across different areas of Singapore. For example, take the case that we have mentioned regarding the 2-bedroom unit that the couple from our last example bought for $700,000 and have since appreciated to $1 million. Assuming that they have mortgage loan left about $400,000, the cash return to them after sales is $600,000. After an even split of $300,000, both their partner can each go put a down payment on a close to $1 million property at a 75% loan from the bank. So after much discussion, we have come up with 3 best times to sell off an investment unit. So if you have questions or if are thinking about properly exposing your house for sale, do contact Home Quarters by going over to www.homequarters.com.sg or send us an email at homequarterssg@gmail.com or direct message DM us at homequarterssg on Facebook or Instagram. Reach out to us in any way you like and we love to help you out and answer any questions you have to sell a home so that you can move on to the next big thing in life. I really hope you enjoy this video and comment down below what other trouble you have when you are selling your house, or even if you agree or disagree with what we have said. We would love to hear from you, so we will be monitoring the comment, so make sure you comment and make sure you click that subscribe button. We here at Home Quarters do a ton of video about Singapore real estates, tips and tricks for sellers, buyers and investors, and loads of other valuable insights. And we are going to continue doing it. So you want to make sure you click that subscribe button and that little bell icon so you will be notified every time we do a new video. If you are still holding on to your investment, I think you will be interested to watch this other video in the series, Secrets and Hacks on Renting Out Quickly, where we discuss how to properly price the rental and if you should purchase furniture before accepting a rental offer. Or check out our other playlist, Real Talk, where we chat everything about purchasing or investing in real estate in Singapore. See you on the next episode. Alright, thank you for watching our video. Do remember to check out our other videos and we have left the link in the description below. Thank you.